Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for June 23rd, 2022. So we've been trading a lot on the threes, fives, and tens with the sniper. And I just want you to notice the lunch and afternoon move in the S&P today. Nothing out of the ordinary. What is the size of the R10 in the S&P? And you should know that instantly. $1.10. You should know that instantly because that's the essential risk box for the most important symbol in the stack, which is the market, because that's 50% of what the market's doing is based on that pattern. I want you to now notice the importance of the dark blue line and the dragon and the PSAR and how trivial the individual candles are. I want you to notice that. And I want you to take about 30 seconds and just see what you see, because I'm going to show you what I see as I look at this thing. Etc. So I'm just looking at all those things. I'm going to do some stuff like the collapsing dragon. Why do I love me some collapsing dragon? And some emerging dragon. Size of the wrist box is $1.10. What if I just got short at every collapsing dragon? And use the wrist box as my 1R, and then just got long at every emerging dragon. Roughly speaking. So I'd be getting short about here, about there, about there, right about there, right about there. And I'd be getting long approximately here, 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 probably maybe another one there, something like that. Would I ever take more than a 1R loss anywhere in there? No. What if I front run that with the PSAR flip? On this one, I get short there, here, here, probably right there. On this one, caught a 2, caught a 2, caught a 2, caught a 2, caught a 2. So that trade looks something like that. This trade looks, whoops, sorry about that. This trade looks something like that. This trade looks something like that. This one doesn't go much of anywhere. That probably goes like that. This one probably goes like that. So the PSAR flip is really, really important. And I want you to notice that the 1/10 of a range stat is a pretty safe margin of error if you're executing at the top of the dragon or the RL10. You're not going to take a 1-hour loss or anything larger than a 1-hour loss. What are you noticing now? Just the, the trends of the day. The big market trend channel. Yeah. There's a certain normal breathing pattern that thing follows. And if you plotted something like, a midpoint of each of those, look how good the RL10 acts as a reasonable, safe outer boundary of those moves. So the PSAR flip box is a good idea for early entry. And the collapsing dragon is always a good idea. I mean, so here's the collapsing dragon short and the second position, and then it bottoms out and it would exit approximately there. I'm just going to put if I just traded that one, whoop, sorry. So I'd have either this trade or this trade. And then the collapsing dragon happens again. So I get this trade to here or that trade to there if I wait for the collapse. So if I get the PSAR flip or the collapsing dragon, I get that trade. Collapsing dragon or a PSAR flip, collapsing dragon to about there. This one probably scratches. This one probably gets out in here somewhere. This one gets out either here or here on that trade. This one gets here. This one probably scratches. This one crushes. That one probably scratches. So the point being, you should spend some time with your targets of choice and get a feel for what they look and feel like over some of that larger time frames. And that the R10 on 1 minute gives you so much room that even if you shift it down to the 3 minutes, you're still doing pretty good there. And now there's fewer signals, but they're dominating. Look at those PSARs. That's telling you from this turning point, you should be getting that whole move on threes. Just saying. So I'll send you this flashcard just as a reminder. When I'm just looking in at the afternoon trade and just zoom in a little more, this is from 1 p.m. Central onward. Just taking the PSAR flip and exiting at the PSAR cross, you get those trades this afternoon, and you're not ever close to a 1 hour loss. You're rarely even underwater. You should study the S&P and its major turning points, because remember, a lot of things we're trading, 50% of the moves of the things we're trading are connected to the large moves in the tides of the market, if we can say it that way. That ought to be on your screen 100% of the time. All right, now I'm noticing on our little daily market health check here, the Buddha giving us some, give us some big ears and calm demeanor. So the last time we saw that pattern, and we were looking for a 1, 2, 3 breakout, it surprised us and collapsed downward. Then there was a nice gap up, and now we got a 1, 2, hoping for a 1, 2, 3 resumption to the Bollinger Band mean. So yeah, I'm ready to take that 1, 2, 3. We're still about 21% off the top. PSAR still slamming down. The short-term momentum is up on the 3-period hull. The RL10 has clearly reversed, crossed the baby dragon. There's the bottom of that thing. Price has entered the dragon. The RL10 has not quite entered the dragon yet. So cautiously optimistic, but mindful of the fact that we are in harsh winter. So remember, the SSC doesn't occur until here. So the RL10 has to get across the dragon. That's the trend. So this SSC, like we said yesterday, the SSC is a counter trend, and you cannot expect it to work. When it works, it's big. It works big because it's such a surprise. Like that one worked. Wasn't a huge win, but it worked. But 2/3 of the time, it's going to fail. So you can't be surprised when it fails. You got to be expecting it. In fact, if it doesn't work immediately, it's failing. That's the mindset you got to be in. Interested, but disinterested. So cautiously optimistic. That just means that we do not have trending behavior yet. For trending behavior, the price, the RL10 and the RL30 must all be outside of the river. So back over here, this was all downward trending behavior because you had the edge of the river here and you had price was out of the river, the RL10 was out of the river, and the RL30 was out of the river. But here, trending behavior ended because the RL30 went back into the river. Now here, price came out of the river, the RL10 came out of the river, but the RL30 has not yet come out of the river. Now it's getting close. So that means this is all tactical noise. This is not trending behavior yet. Trending behavior would occur if this rolls over, then that would be enough for the RL30 to come out of the river. And when that happens, then you have downward trend. Yeah, you can't have a P1 until the RL30 comes out of the river, and then the RL10 crosses it approximately right about there. So this is a choppy tactical market right in here. This is not trending behavior. That's all that means. All right, let's take a look at the indexes. Oh, they were all pretty tightly clustered today. That's actually a good sign for the upside. Oh, you're asking, could it not be an SSC? Yeah, I expect the RL30 is going to come out. It wouldn't technically be an SSC if it crosses, but it never came out. So yeah, would I take it anyway? 100% of the time. The S&P was up 1% today. IWM was a little better at 1.2. The Qs were 1.49. Treasuries were up 0.8. The diamonds 0.7. Emerging markets 0.3. So all of them were in the green today, but the difference between them was only about 1% between the Qs, which were best, and emerging markets, which were worst. Interesting. Tight compression. All right. Since today was an update, let's take a look at the downside first. These were the underperforming sectors. Simon Property Group, 0.78. Here was the cut line between winners and losers. So finance, then the great big block here between minus 0.5 and minus 3%. Mexico, marijuana, lumber, materials, the other lumber, VIX, Brazil, blended commodities, oil, wheat and precious, and agriculture. So all of the non-tech things that had been leading the way failed today. Possible turning point. Energy and oil exploration failed today. Individual companies that were horrible. The steels continue to do poorly. There's Alcoa, Cliff, US Steel, Tesla down 0.43, Devon Energy off 4.9. So a lot of those industrials and energy and metals, lumber. Who are the winners today? Again, there's the S&P up 1%. So you had lithium 1.38, then a cluster here of tech, consumer discretionary, the FANGs, staples, real estate up to 1.9 or 2%. Blockchain 3%. All the disruptors now, blended large cap crypto, Bitcoin futures, global future of finance, Ethereum, Arc Genomics, Arc Innovation, that's all between 3 and 8%. And you have clean energy, oil, or biotech. So all the disruptors. At the very, very top, Coinbase, Bakkt, Squarespace, all that volatility now working for you today, between 11 and 13%. Robinhood, Rivian doing pretty well, while Tesla did not. Microsoft and Apple, 2.25, 2.16, much better than the two techs. So there's money flowing into those two. So that's a very good sign as a tactical trading target for tomorrow. If tech continues to do well and they're doing a little better, I would pound on those. And then your other target, PayPal, was not bad. That looked, we've seen so many times that you get one day momentum and then smash the next day. So I'm certainly not swing trading them. But I am interested here as an indicator of a longer term shift. All right, let's look at the reports. All right, dashboard 1. Bearish normal. Slight improvement. 12% below, the sideways market, which is up there around the 200-day moving average. We're 12% below that. Still in risk off. So that's a tactically chaotic market. That's what that's telling you. But some slight improvement the last couple of days. To lure us in or to be the turning point? I don't know. Strength in healthcare. Johnson & Johnson, Merck, Walmart, United Health, 4 out of the 5 are in healthcare. Alcoa, Cat, Chevron, ExxonMobil, American Express, 4 out of the 5 are in that industrial, basic materials, energy complex. Looking at the Dow, still tons of auto framers firing well. All of these red lights here on the overreaction short just means that what we have is a market that has, horribly sold off and then bounced just enough that you wonder, is that a dead cat bounce that's going to smash this to the downside through a collapsing dragon? Or is that actually the first leg of the next leg up? So perfect critical state. And that reminder right there tells us that everybody that was short this market, and especially those symbols, are looking at this hungrily like a dead cat bounce and can't wait to smash that to the downside. But at the same time, all of the bottom feeders and value pickers are looking at this as a possible turning point, which is why this is a critical state. And sometimes it works with an SSC and sometimes that fails. and you trust the trend, but you're ready to frame it in both directions. ETFs, the same deal. Huge number of auto framers, handful of OR shorts, giving us the warning. Formerly strong metals, mining, and energy, turning points there. Take your pick on the auto framers. I mean, you got some that are still, this whole cluster, better than 8-1 in the broad indexes. There's the S&P at 6-1. And that just, again, it means that wherever the 10-day high was, that we've seen a sharp enough sell-off that today's range, whatever that is, 1 unit, if we use that as the unit of risk, that in the S&P, we'd see 1, 2, 3, 4, 5, 6. 6 of those just to get back to the 10-day high. Now, if it fails, we would be CDing all over that thing. So all of these that are near the top of this auto framer are not only amazing reversions back to the 10-day high, but they're also the ones that have fallen so far that you get a huge, harsh winter effect. And so that failure makes them prime time for short side if it starts to fail. Check or hold. That is such a handy way of sorting and calibrating your judgment. And here's your framing data for mechanical trade framing. Seriously, 1 page. The daily squeezes now. This, again, reflects the fact that as you go through daily bars and whatnot, you get an average range. And what we're looking for on the daily squeeze is that today's range is some small fraction of the average range, which means that if we were able to frame that tightly squeezed spring, that tightly coiled spring, and it broke out of the daily range, then you'll get this kind of multiple if it just makes a range stat move. So Coca-Cola, Home Depot, Tech, and Tesla 2-1. If they just make a range stat move, that tells you how tightly compressed the daily box was. That daily range was so tightly compressed that if it does break out and you get that range stat move in either direction, you get that kind of multiple. So that's, you're trading the coiled spring on this one, sorted by the ratio of a range stat move divided by the daily range. And remember, if the daily range was this, and our little R10 is a fraction of the daily range, man, that 2.7 could quickly become 10-1, depending on how tightly compressed the R10 is compared to the size of the daily range. This basic geometry. That's such a good idea. I don't spend much time on this. This is from the advanced course. The main idea with the regression lines, we use the 10, 30, 90, and 270 to estimate fair value at different time frames. So the R10 is what we think of as the trader's price. And so the 10 and 30 fast and slow on the fast pair allows us to find those turning points. And we think of the 90 and the 270 as the slow pair. And the 90 is the fast member and 270 is the slow. And there's a factor of 3 in that fractal relationship. 10 times 3 is 30, times 3 is 90, times 3 is 270. So instead of having to switch between time frames, you can just see where the RL30 on our chart is the RL10 on the next higher time frames chart, roughly speaking. So there are times in the super pinch when that risk box is tightly compressed. The Z3 lines are tightly compressed. And you have the RL10, the RL30, the RL90, and the RL270 are all tightly compressed inside that box. So when you get a bunch of sideways quiet action and it brings everything compressed, you have that super pinch in which not only do you have abnormal lack of volatility, but all of the different time frames all agree that that's approximately the fair price. And that's going to remain the fair price until price bars break down away from it or up, followed quickly by the trader's price of the RL10, until the traders have taken that as far as they can based on their power, money, to move the price that far until it can't go any further and starts to roll up. Well, you would see that as a harsh winter, wouldn't you? Probably. And if the PSAR flipped, we could probably end up putting a risk box on there. And then the RL270 becomes a reasonable upside target for any trade that features that kind of turn. And so if we want to rapidly estimate some reward to risk ratios on the daily charts, we could express the difference between the RL10 and the RL270 as some multiple of ATRs. And that's what this column gives you. This tells you the ATR. That tells you the ratio. The number of ATRs between the RL10 and the RL270. So if you could risk one ATR in Cisco, you could have an 8-to-1 trade and 7.8-to-1 in US Steel, and Apple in tremendous position there at 6-to-1, etc. These green ones are the symbols that are the most ATRs below their own RL270. So they look like this. The RL270 is here. The RL10 has moved down and is back. And then they are that many ATRs undervalued compared to the long-term buy and hold fair value of the RL270. The ones in the red are hot. They're the most ATRs above their own RL270. So that's the one if we looked at it. The RL270 would be here. And you had an amazing price movement and rolled over. And now you have that many ATRs above. That's the excess short-term gains. This is the excess short-term value. So the regression line fractal framework is a way to rapidly assess those. Now, in the Dow, these are the 5 that are the most below their ATR. And these are in the Dow the most above their ATR. And then this is for the ETF 100. I got Stephen working on this for the S&P 500. currencies, commodities, and the ETF 200, just to give them something to do. That's a way to rapidly find either value or momentum plays after the extreme moves have already occurred and the reversion back to the 270 has occurred. So that's how you read that. Let's shift to the sniper. Tons of Godzillas in the house. Caterpillar, DuPont, Honeywell, GE, Target. In the tactical symbol set, Alcoa, US Steel, say no more for me. That's all I need. Materials, gold, wheat and precious metals, the two lumbers. And again, this is sorted by the Z5. These are all stealthy Godzillas because they're under zero. They're horribly oversold, but they're quietly stealthy turning points. One fireworks. So he's extremely overbought. Large volatility. So that thing went boom. So it's already at the top. And today it went boom with a big 2 sigma, or the 5 day is a 2 sigma, and it was an average range day today. So is that going to fail? Or is there another big boom coming? We don't know, but that's an interesting one. The fence sitters, these are all the ones that are within that middle of the road on the long-term and midterm between 0.4 and 0.6. And again, sorted by Z5. These two had a big day and are stretched on a 5 days. So that could be the breakout movement happening. And you can see that they are near the top of their 10-day range. So these things were in a tight range between 0.4 and 0.6 and have had a short-term break to the upside on large range days. That could be breakout leaders, if you look at it that way. And because they're in the middle of their look back periods, these things were not symbols that got crushed in a large way. They maintained their position in the middle of their trading ranges. So they were not in a panic sell-off, and they're starting to move up with power. Interesting. The most quiet and the most volatile as a function of their 5-day volatility Z-score. I'll leave that to you to hunt. There's gold in that mine, though. Being dominated by the winter, both sides of the aisle. This is our tactical symbol set, sorted by Z5. These are the ones that are exceptionally volatile. Then normally volatile down to Z-score of 0. Now we're getting into quiet territory all the way down to here. And then these are exceptionally quiet. So these are quiet. These are exceptionally quiet. This is kind of normal. And this is volatile. Energy, Devon, treasuries, blended. Yeah. I like the fact that the steels are smashed, but quiet on their volatility. That's like smashed and terminating in some dojis, ready to break out or break down. That's all I need. Seeing a little bit of the turning point here. Who is leading the way? Walmart, Merck, Johnson & Johnson. That's your healthcare. And there's healthcare, the sector. And real estate. Those are, look at those defensive plays in here. Real estate, consumer staples, healthcare, and treasuries. Compared to the pain and suffering up in here. You can begin to see the divergence. Here's where we're using our 10, 30, 90, 270 look back periods. If this was going to fail, it would be failing, but it's holding. There's our head and shoulders and luring us along much more. All right, let's look at some sniper trades. The sniper trade of the day today, Devon Energy. It's been Godzilla format. Breaks down. So that's the, let me draw the, here's our start of the day. Breaks down below the drag. It opens above the dragon, then breaks down below. So I get short, collapsing dragon, standard risk box, 50 cents or 60 cents in Devon. That's the R10. Micro win. I take the PSAR break to the short side now. Standard risk. Micro loss. Instantly short again. 1, 2, 3. New low of the day. Collapsing dragon. Routine. Second position on the second collapsing dragon. Third position, another collapsing dragon. Routine exit. 5-minute charts. Just keep shooting. Notice how good the PSAR was. I'm not going to, I don't want to give it all the way back up to there to lose. Like I don't want to give it up all the way to here, even though the PSAR looks like it's handy. I take the fractional loss and then just re-enter right away. I don't care. Devon Energy. Large multiple. Probably 7 or 8. Our old friend Peak, that's that healthcare real estate thing that was a Godzilla trade before. Opens, crosses the PSAR, crosses the dragon to the upside. Standard entry, standard risk box at the bottom of the dragon. Check or hold. Starts rolling over. I like getting paid early in the morning. Tried long and failed quick. tried short, got paid, standard exit, middle of the dragon. Crosses the PSAR, standard risk, micro loss. Get tired of it. It was droning on. There were much better choices by that time. Here's Microsoft, tech leader. Rolls over, crosses through the dragon, standard risk, going short, micro loss. I played the like a Kata 2 on this one. I wasn't persuaded. So like this, and finally took that one. I had thought about where are we at here? You know, I thought about this one. That probably would have scratched. If I'd have been good, I might have made a little bit on that one. So now I feel like that's a Kata 2 to the upside. The dragon's starting to slope up. Standard gain. That's about 1 hour standard gain. Kata 2 again. Scratch. Collapsing dragon rolled over. Again, could have had that earlier. Probably like right in here or in here. Scratch. Nothing. So micro gains on that one. Chevron energy has been getting crushed lately. Standard short. Scratch. Standard short. Pretty good gain. That's about 2R. Re-entry short. Scratch. Tesla. So again, these are all 5-minute charts. Rolls over, PSAR short, standard risk of $7. Strong move in my favor early. It's still making lower highs and lower lows, so I just stay in. Standard exit when the SMA 3 reverses. SSC crosses the dragon, hits the PSAR, standard risk. Basically a scratch. Kata 2 re-entry. Half an hour win. SFC short. It's the PSAR flip. Standard risk box. Scratch. Re-entered short on the collapsing dragon. Was a little slow. Scratch. Missed the short big time. Oh. Span of control. Next one up. Brazil. Downward slope. Godzilla play. Crosses the dragon. Standard risk box. Short. Scratch. Short. Scratch. Short. Scratch. Okay, I get it. Long. Scratch. Short. Paid. Finally. Covered my costs. U.S. Steel. Godzilla. Crosses the dragon. New low. Short. Standard risk to the top of the dragon. Micro loss. Re-entered short. Micro win. SSC long, scratch, collapsing dragon, PSR flip, short, paid. So a lot of grinding today, a lot of quick losses, quick scratches, re-entries, just trying to find the mover. Traders. Maybe a little early. No, I guess that's all right. 1, 2, 3. Quick loss. Tries the short. Quick loss. Scratch. Gets paid micro. This is where the entry should be. Instead of here, you should get paid on that one a little bit. Off the desk. Darn it. But that's where the entry should be. This could be a second entry. Now, if you're that far into the trade, we only kept that much and we gave back twice as much. So I want you to take a look at preserving those gains. This is fine. There's your reentry. You should not lose money on that trade. This is a good piece, our flip box long. Good exit, reasonable short, reasonable exit. Take care of this. This is more important than trading. What I'd like you to do is try that 1 minute drill where you're trading the fives. Just express this on the ones on the simplified chart like I showed you at the start of this one, and just get a feel for some of these turning points and see if some of those patterns are a little clearer to you, because your risk box is still going to be constant, but it's going to be moving so fast quickly that you'll see those turning points a little sooner. And my spider sense is that you've got an eye for this now, that you may, by looking at the ones, you may be able to now move to the threes. That you go 2 levels down, that's too fast. You come back, and then you're able to trade on the threes instead of the fives. You're going to find that is going to be helpful, especially in this choppy, because there's room inside here on the shorter time frames to get paid or to get out sooner. Tesla. Paul found the movers today. Perfect entry, pretty good entry. I think on this one, I like that 2-bar low. Makes that a nice trade. Great short. Maybe I'd be here, but that's still pretty good. That's a good scratch. This short is slow, but it's still here. That's good. Great exit. This entry is slow. This entry is slow. Great exit. That's a good re-entry, great exit. So really nice work, Paul. Arch, let's see what we got here. You're trading with too large a size. You're holding the range too tightly. You're trying to make sense of the trades instead of just following price. The rules are Just follow the price. Don't try to make sense of it and try to be right. Good short. This should be a scratch. Good long. That's a good scratch. Great short. Oh, this is a re-enter long. That's where our short should be, right there. When that one doesn't work immediately, when that fails quickly, that's your short. Then you get paid here. This one should not lose money. It lost money. There were two places to get out of this to win. The short was slow. So we got to be short here, not here. Then that gets paid. This is our long. That should not lose money. This was slow to get in, but you got out on time. I would like you to get in sooner and get out faster. There's your long. There's your short. So tighten that up. You're trying to believe in the trade, and you're probably trading with too large of size because you want to be right. Just follow the rules. Doesn't work, so he gets out fast. Quick reversal, gives back some. You might have gotten out here on that because you're so near the Z3. You might have gotten out here, same entry. That's still pretty good. This was a little slow to get in. That should be getting in here. And then this was slow to get out. Good short, good scratch. That's pretty good. Gave back too much. Great short. Horrible exit. Good long. Great exit. I probably would have tried this, but I think you were probably away from desk or getting reset. Now you got a low, higher low. This is a great long. Didn't follow through. Good job not waiting for the end point. So we got paid to trade today. That's where we should be long. Then that would get paid. This is a good short. Scratch should be here, correct? Pretty good long right here. Good scratch. Could be short. That'd have been a scratch. Good long here. Good jump. Re-entry. Good scratch. Got paid. Oh, we gave back too much here. You gave back almost a full wrist box. Great re-entry. Gave back too much. I probably would have been short and scratched, long and got paid. Good. Short, get paid. Good scratch. Should be long about here. You get paid on that one. Probably re-enter here instead of here. Then that scratches instead of losing. Short should be here. Second position should be crossing the VWAP. Third position there. Then that should be about 3. Check some of your others here. God, that's, take a look at the one I did on peak. I think I got that one. And then I'd like to see a short here and then cover here. When it crosses the dragon-ish short, re-entering the dragon, covering. That's a good long shot. Somehow you get out of here with a 0. That's okay. Go look at my Tesla. This was one trade for me. These were higher lows. I'm sorry, lower highs and lower lows, and was respecting the previous 1 bar high. And so we were able to get paid in here. And then I picked it up here when it crossed the dragon and the dragon turned. So that's sort of like an owl. And you got that one. That's pretty good. So I think all that fast trading in here blew you up. And I'm trading it on the 3s instead of the 5s. Maybe easier to see. That should be a scratch. And then when this reverses back up, maybe that's a COTA 2. That should get paid. Your short should be here. Then that's going to get paid. And although that got paid and that scratch, so you probably netted to flat. And I don't understand how you're computing R on this one. If for instance, you are long here and you're 20 or 50 pips or whatever you're using, that whole thing is 1.0. You're getting these micro R's, and I don't understand where the numbers are coming from. So I'm just going to respond to the trade patterns. This is looking correct. So there's your PSAR flip box. Perfect entry would be here. That's still pretty good. I like that one. I like the 2 exits. Nice. So here's my point. If this is your standard risk box, the way we mark it up, that's a 1.0. So this trade from here to here should be 1, 2, 2.5. That should be 2.5 R compared to what your 1 R risk box was. And then this one is probably 1 R. So this should be, the way I'm counting them, that should be about 3.5 R. So I'm not sure where you're getting these numbers, but the pattern is correct. The CDs in Brazil, when they collapsed, just crushing. Perfect, 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 perfect. When they don't work, it's small. When you're right, it's large. +3. +3.5 when you add the other fractions in there. And then today, the CD only. He's getting the big moves, micro grind, big moves. I would say this is one on your personal, your optional rule. That one, when that RL10 does not go back up, but it just immediately fails, that's telling you. And plus, if you draw that line right over here, you'll see that's the same residual support level that collapsed. And then that's why you get that big breakdown. All right, that's everything. All right, good work today, guys.